Imagine a company that surged to a $1 trillion valuation, only to subsequently lose $200 billion of market capital in only several months. Is the Tesla bubble finally burst, or is this an opportunity for investors? Today, we'll delve into TSLA stock to understand its wild swings and whether or not it's set to explode or crash. Don't miss this important episode. Wall Street won't tell you much of anything. Welcome to Bearish to Bullish, your go-to source for breaking down the biggest stories in tech and finance. Today, we'll focus on Tesla, an iconic company which has both made waves on Wall Street while simultaneously sparking outrage from critics. Disclaimer: the content provided on Bearish to Bullish is for educational and informational purposes only. Nothing in this video or on this channel constitutes personalized financial, investment, or tax advice. All investing involves risk, including the possible loss of principal. Past performance is not indicative of future results. Before making any financial decisions, you should consult with a qualified financial advisor, accountant, or other professional to discuss your individual circumstances. Tesla stock has taken an extreme tumble since January 2025, falling from an all-time high of $488.54 earlier in 2025 to $345.88 by June 2nd, tracking against Tesla market capitalization. This represents approximately $200 billion lost market value. Tesla market cap. Tesla is facing an extremely challenging macro environment. Rising interest rates, falling demand for electric vehicles, and rising competition from Chinese manufacturers like BYD. Further complicating matters, there's also Elon Musk's political involvement, which has spurred boycotts and negative headlines against him, all factors which contribute to its current instability and potential path forward. So what's driving all this turmoil, and where is Tesla headed next? Let's take a look. Let's first examine Tesla's earnings, which sent shockwaves through the market. For Q1 2025, Tesla reported revenue of $19.34 billion, an 18% decline from their Q1 2017 revenue of $21.3 billion, missing Wall Street estimates of $21.11 billion. Adjusted earnings per share fell short of expectations at 27 cents, well short of the anticipated 39 cents figure. Automotive revenue also took a hit, dropping 20% year-on-year to $14 billion due to 13% decrease in vehicle deliveries to 336,681 units. What caused the shortfall? Tesla reported production disruptions caused by Model Y line transition across its factories, which resulted in several weeks lost output. Furthermore, price cuts to stimulate demand drove down gross margins to 16.3% from 17.4% 1 year earlier. However, there was good news. Tesla's energy storage business deployed 10.4 gigawatt hours, showing strong growth. Furthermore, $595 million in regulatory credits were sold off, helping offset some losses. Looking ahead, Tesla did not provide full-year guidance, but highlighted plans for more affordable vehicles as future projects. Could these numbers signal recovery, or should investors proceed cautiously? Tesla's AI ambitions could hold the key to its future success. At its center lies Dojo, Tesla's custom-built supercomputer designed specifically to train its full self-driving neural networks. Dojo analyzes millions of terabytes of video data from Tesla's fleet of over 4 million vehicles to improve FSD, which, while not fully autonomous yet, is making significant strides. Tesla plans to produce millions of Dojo 2 and AI 5 chips by 2025 to power autonomous vehicles and possibly license this technology to other companies. They've also invested in their Cortex supercluster with its 50,000 NVIDIA H100 GPUs to enhance FSD version 13. Tesla could become an AI powerhouse if they achieve full autonomy, potentially offering robo-taxi services as soon as this year in Austin. But with competitors like Waymo and Cruise developing autonomous technologies of their own, is Tesla's AI bet game-changing or risky? Tesla has expanded their product offering beyond cars to stay ahead of the competition. Their Cybertruck, now in production despite initial delays, has gained momentum quickly with a starting price of $60,990. Although Cybertruck was subject to recall in March of 2025 due to potential crash risks, the vehicle is making inroads into the highly competitive pickup truck market. Tesla is planning a more cost-conscious model called Redwood that should hit production by mid-2025, with an expected starting price of $25,000 in order to capture market share in price-sensitive regions such as China. Roadster production has begun with SpaceX-inspired features like brief hovering capabilities. Its launch timeline remains uncertain. Energy has also proven its worth in driving growth. 10.4 gigawatt-hours of energy storage was deployed during Q1 2025 alone to support utilities and residential customers. Tesla's Optimus humanoid robot is also making progress, with potential applications in manufacturing and logistics, though still in early stages. Will these expansions broaden Tesla's market and boost its stock, or is too much spread too thinly across its business? Let's just zoom in on Tesla's stock chart. On June 2025, Tesla's stock price stood at $345.88. Volatility in Tesla's stock price has seen it plummet 53% from when it peaked around $735.91 at the end of 2024. Key support levels are between $215 and $190, with further drops to $106 possible should these support levels break. On the upside, key resistance points include 298 to 328, with higher targets near 488 possible in an upturn in price. Technical indicators are mixed. The Relative Strength Index is showing some buying momentum while MACD suggests bearish trends. Tesla stock forecast analysts remain divided, with price targets ranging from $175 to $550 reflecting their uncertainty. Will Tesla rebound, or will it continue to experience more pain? What has the smart money been doing with Tesla? Institutional ownership has seen a steep decrease from 66.2% in March 2023 to 47.5% by March 2025. This suggests actively managed funds are cutting their positions significantly. Tesla institutional ownership. Major shareholders like Vanguard Group, with its holding of 6.79% shares, BlackRock and State Street remain major stakeholders. But overall institutions have decreased their interest in Tesla shares. Short interest has also increased significantly, with 2.64% of outstanding shares sold short, suggesting bearish bets on its near-term prospects. Analysts at Bank of America and other firms have reduced price targets, citing falling sales and brand issues as reasons. Are institutions losing faith in Tesla, or is this simply profit-taking after its successful run? Tesla investments do not come without risks, and Tesla faces its fair share. One such risk lies with China. Sales there dropped 15% year-over-year in May 2025 due to fierce competition from BYD and other local manufacturers. Second, Tesla's valuation is staggering, with a trailing PE ratio of 196.97, far exceeding competitors like General Motors and raising questions about sustainability. Thirdly, competition among electric vehicle brands such as BYD, Lucid, and Rivian has intensified dramatically in recent months as their models gain market share and become competitive with Tesla's. Regulatory pressures, such as new tariffs and the federal investigation of FSD, create additional uncertainties. Finally, critics argue that Tesla stock is overvalued given its dependence on automobile sales and scaling new ventures like robotics. Could these risks derail Tesla's growth trajectory? Tesla offers an attractive bull case. Its innovation leadership in AI and autonomous vehicle technology stands it out. While FSD and Dojo could revolutionize transportation, Tesla bull case. Furthermore, its loyal customer base fuels demand even in challenging markets. Global expansion with new factories in China and planned production in Mexico expands reach further, while energy division growth, including deployment of energy storage products, diversifies revenue streams further still. Analysts like Cathie Wood of ARK Invest predict Tesla could reach $2,600 by 2029, implying an 800% rally due to Robotaxis' new model promises delivered upon by this assuring promise. Should Tesla fulfill these promises, exponential growth awaits. Could Tesla become Apple of its time? Elon Musk is Tesla's driving force. Whether you like him or dislike him, his vision has propelled the company from pioneering electric vehicles, EVs, to pushing boundaries of AI and space exploration. Elon Musk has attracted controversy for his political stances and role as part of President Donald Trump's Department of Government Efficiency, prompting boycotts and negative press coverage affecting both himself and Tesla stocks. Tesla shares have declined since Elon Musk's Washington stint, with some analysts noting a brand crisis. Yet his political connections could prove useful for Tesla if regulatory hurdles or government contracts need easing, or when securing government contracts come up for negotiation. Musk plans on withdrawing from politics in May 2025 in order to focus more on Tesla. Will this stabilize its stock, or is the damage already done? Tesla stands at an inflection point. AI innovations, new vehicle models, and energy solutions could propel them forward, while competition, high valuations, and Elon Musk's controversial statements pose substantial risks. So where do you stand on TSLA? Have your say in the comments. Would you buy, sell, or hold this stock at this price? This video should only be seen as informational purposes and should not be taken as financial advice. Before investing, always perform your own research and consult a financial advisor. If you enjoyed this deep dive, share, like, and subscribe for more content related to tech and stocks. Are you bullish or bearish on Tesla stock? Let us know down in the comments.